Thanks very much, Neil. The gentleman behind us is going to be playing with the laptop to fix it so we can get that buzzing sound. Quick question. We're all here to understand property investment. Can you guys hear me in the back? Yep, fantastic. Could you all please stand up? Could you all please stand up? Okay. If you think that 10% of South Africans that invest overseas lose money, 10% or less, please sit down. 10% or less. 20% or less, please sit down. 30% or less, please sit down. 40% or less, please sit down. 50% or less, please sit down. 60% or less, please sit down. 70% or less, please sit down. 80% or less, please sit down. We've got 3 people. Research done in 2010, that more than 80% of South Africans that invest overseas actually lose money. So, the very first thing that I'd like to just help you out with is that we've actually got a report outside on the 6 things you need to know before you invest offshore. We've helped 2,000 people invest overseas to a value of 1.6 billion. I personally have invested, I've made my own mistakes. That report's there to help you make sure that you don't. The second question, who here is interested in American property? Who here thinks that America is in trouble and there's too much chaos and I'm not interested? No one. Who thinks that I need to know more but I might be interested? What about, I like deals, and I've heard there's good deals in America. What about, I want a passport, green card? Guys, I know I'm last, but we need a bit of interactivity here, please. Thanks, Neil. What about the most important thing in property is income and yields? Who here is interested in yields? And if the yields talk, I'm interested. And finally, what about I understand the fundamentals and understand that this is the best opportunity and the biggest wealth transfer that we have seen in our lifetime? Interesting. Does anyone know this man on the left here, Warren Buffett? Warren Buffett is 81 years old. I highly recommend you read this book, Snowball. It's the autobiography of Warren Buffett. He has never ever bought a property in his life except for his home. He bought his home when he was 30. He still lives in the same home now that he bought for $35,000 when he was 30 years old. And believe it or not, this man that has consistently told us that the stock market is better than property, last month or in February came out and said, along with equities, single-family homes in America are a very attractive investment right now. On CNBC, Buffett said that he would buy a couple of 100,000 single-family homes, notice single-family homes, if it were practical to do so. If held for a long period of time and purchased at low rates, Buffett says American houses are even better than stocks. I personally didn't think I'd see that in my lifetime. Donald Trump, apparently, according to Neil, is going to come out in his magazine, also said it's the best opportunity ever. And I'm going to show you a little bit about Dr. Dolph DeRuis. But what caused it all? You know, it's all good and well to tell us that there's opportunity. What caused it? I've been fascinated with America. James mentioned that London was where's James sitting? There. James mentioned that London is a great investment opportunity. I own a number of properties in London. I don't own any in America. It's time to go over to America. Neil, myself, and Brendan went for 11 days. We went to 8 cities. We traveled 39,000 kilometers, which if you don't know how far that is, it's going Durban, Cape Town 31 times. And we spent 90 hours in the air. But why did we do it? We did it because there's a fantastic opportunity in America, but along with the opportunity also comes with a lot of risk. So you've got to go over there. You've got to go and kick the doors down. You've got to go and see what's happening. Let's understand why that opportunity came about. Firstly, you've got the subprime crisis. It came about because of mortgages. They had ninja loans. No income, no job, no assets. Doesn't matter if you breathe, we'll give you a mortgage. No shit. I met a guy 2 weeks ago. He said, if your mortgage used to be $2,000 per month, you could negotiate with the bank and you would tell them how much you could afford. I can only afford $300. No worries, sir. You can borrow $300. We'll put it on the back end. You can understand why we got ourselves into a bit of trouble. Those were known as reset mortgages. And what happened is those reset mortgages came to term, and they started coming to term in 2007, 2008. That there is Lehman Brothers. This graph's a little bit out of kilter because we're somewhere over here now. The scary thing with America and with the whole world is there's $1 trillion of unsecuritized debt coming through in commercial mortgages. So residential's washed its way out, commercial mortgages needs to be watched. Something has gone hopelessly wrong there. The second thing is that the second biggest thing that happened in America is oversupply. In 2004, 1 in every 4 homes that was built was unoccupied. Now, if we knew that, we knew we would have been in trouble. 10 million homes were oversupplied by 2006, 2007. And interestingly enough, and I really don't know what's happened to that graph, but effectively the market went up, it's gone down, and it's bumped along the bottom. But with people like Warren Buffett and them coming into the market, I heard a classic saying, Wall Street is coming onto Main Street. The world is waking up to the opportunities. And because of that, we actually found, very interestingly enough, the start of an uptick in terms of where the property market was. Now, there were 3 reasons why I was extremely impressed by American property. The first one was the story. We were there for 2 weeks, and literally almost every day there were reports in the press about how the economy was improving. So the first thing was, this was in the Wall Street Journal, in terms of what was happening with the economy and where it was going. This year was in US Today. Optimism shows in survey on the economy. All the economists believe that the economy is going in the right direction. The second thing, there's been a 35% drop across the entire market. 35% drop. Your house used to be R1 million, it's now worth 650,000. Put that into perspective. The third thing, replacement value. You can talk about the highs of 2007 and whether it's relevant or not. I don't necessarily care. But if you build a house and you can buy it today for 40 to 60% of what it costs to build it, that I'm interested in. Because that's true value. Property fundamentals. Rent. When I was in America in 2010, on my last exploratory trip, I was there for 3.5 weeks. I understood that there was massive opportunity, but I couldn't find the right partners on the ground, and my belief was that the tenants, they weren't tenants. You can buy the greatest discounts around the world, but unless you get income, you don't have anything. The biggest lesson we all learned from the global financial crisis is those people that chase capital growth are dead. It doesn't matter if you're an individual investor or the biggest property funds in the world. Those people that focus on income and yields are not only alive today, but are thriving. Does anyone disagree with me? As my interest. Interesting enough, in America, 2 things have created a rental surge. Firstly, psychology. The average American has been repossessed. They can't actually fathom buying a house. Not only have they been repossessed, but the IRS, the tax services, are now coming after them for the shortfalls on the tax from the bank write-offs. And I don't have time to go through that, but you can imagine they are getting kicked and kicked and kicked again. We say to them, why don't you buy a house? There's fantastic value. They go, dude, fuck off. Sorry. But seriously, like they're not interested. Psychologically, they're not interested. So what has actually happened is not only psychologically are they down, but they can't get mortgages. And so literally, more than 50% of Americans are now renting. Secondly, supply and demand. Interestingly enough, and you spoke about it, Stuart, there's been no construction for 4 or 5 years. And yet the population has continued to grow. More and more people are living with their in-laws, etc., etc., etc. And that is starting to change. And the fundamentals of property are supply and demand. James spoke about it in London. I find it fascinating in London myself. Where the market rose and crashed, like Dubai, like an island, and stayed crashed, was because of supply and demand. In a place like London, it crashed a bit with the global financial crisis. Within 24 months, it's recovered. That's the fundamentals of supply and demand. Interesting, some stats here. This year is inflation-based house prices. You can see the huge rise and then the fall. You can see here, based on rents, the rise and the fall. You can see the trend line. And basically, with the fall, we're back in trend. Here, everything should be based on what income you can own. I don't care if you're buying a home for yourself or whether you're an investor. Prices should be based on income. There's the trend line. You can see we're back in equilibrium where we need to be. And then lastly, the thing that blew me away was actually the examples of the properties that you could get. How much would you buy that house in South Africa for? It's a 3-bedroom home. Anyone want to venture a guess? I don't care what area. How much would you buy a 3-bedroom, 2.5 million rand? Interested? 2.5 million rand. Anyone else want to venture a guess? Pardon? 1.5? 1.5 million. This house here, 3-bedroom, 2-bathroom. The REO, which is the bank repossession price, $23,000. 187,000 rand. Rent, $800 to $950 per month. Appraised value, so in today's value, $40,000. That house there, you can see that gentleman there. You might recognize him. What do you think about that house? 4-bedroom house, $86,000. Rent, $1,350. Appraised value, in today's market, $150,000. Sold in 2006 for $200,000. And what about this house? I mean, this is certainly a house I could live in. A nice big 5-bedroom house, purchase price $135,000. That, ladies and gentlemen, is R1,000,000, plus minus. R1,000,000. Rent, $1,500. Sold in 2007 for $250,000. Replacement value in today, $240,000. Anyone seeing some value? This house in Memphis, 3-bedroom, 1-bathroom, $29,000. Rent, $700. Appraised value, today's market, $52,000. This is an existing house. These are existing numbers with existing tenants. Just to give you some ideas of cash flows, and we don't have time to go through this in detail, but you're buying for $29,000. Closing costs, $920. Your insurance for your first year, $112. $52,000 current market value. Annual rent, $9,300. Cash on cash return, 32%. Net rental profit, $6,500 per year. Net cash on cash, 23%. Exit in 2 years' time, $65,000. Profit, $36,000. Return on investment, 125. All for a paltry investment of 240,000 Rand. You can barely put a deposit down on a house in South Africa for that. That there is actually the property. That guy there, you can't really see him, Charles, was very good friends with Elvis Presley. He does this, that's what he does in Memphis. He buys these houses, he renovates them, he's got a full management solution. This is in Orlando. It's 5 minutes from the center, which is a place called the Millennia area. Neil, myself, and Brendan had to go and check out a nightclub there where Tiger Woods was caught for all his indiscretions. Right there in the Millennia area. 2-bedroom, 2-bathroom, 847 square feet, which is about 840 square meters. $70,000 rent, $900 per month. And you can just see, this is what the baby boomers, there's 10,000 baby boomers a day in America going into retirement, and they are not wanting to live in the New Yorks and the Chicagos in the cold, they're wanting to move to Orlando. Then you've got Disney World. Disney World and the other 2 theme parks employ over 100,000 people per day. 50 million people come through Orlando Airport every year. And even though we've had the global financial crisis, Disney World has never had less than 100,000 people through its gate per day. They're your tenants. And then here's a cheaper unit, 1-bedroom, 1-bath, $44,000, rent $650, sold in 2006 for $77. And then lastly, just for James's purposes, you've got New York. These are called the multifamily. I love in London, I own properties where I've got 4 or 5 bedrooms. I rent them out by the bedroom. It's fantastic because if one tenant leaves, I don't lose my whole income. I only lose one tenant's income profile. What you do here is buy the whole building. This is known as the 3 multifamily. That's also a 3 multifamily. And interestingly enough, you're buying a 2 multifamily for 120, a 3 multifamily for 200, and a 4 multifamily for 250. And you're looking at between 1,000 to 1,200 per family. Interestingly enough, if you're not convinced by the investment, the Australians are. In October, they listed a fund on the Australian Stock Exchange. They raised $100 million. They bought 130 properties in the last 5 months. These exact properties in this area in New York. And that's just some of the properties that they bought that we went to go and see. And for those of you not interested in houses and you want to buy an apartment, there's an investor that's got himself into trouble. There's 4 times 1 beds selling at $65,000 with a rent of $800. And for those of you, that's a brick building. I get that in America sometimes. So lastly, that's the examples. The last thing is that I have shown you this, and some of you might have seen my email already, but I did just want to quickly show you something that's quite important. I went on private property literally this week. I tried to find a house for R1,000,000 Rand, which I have to say was actually quite difficult. There's a 5-bedroom house in Preston Park, Midrand, for 1.3 million. It's actually reduced, and it's the same price as 8 years ago, so it's got a nice big sales pitch. The rental, 7,000 Rand per month, which I think is fairly accurate for the average yield you'll get in South Africa. That house I've already shown you, 5-bedroom, $135,000. Let's just do a quick comparison. You're basically looking at a price there of 1.3 million. In South Africa, in Rand terms, it would be 1,080,000. You get a gross rent here of 7,000. There you get a gross rent of 12,000. You've got a yield here of 6%. You've got a yield there of 13%. You've got a discount here of 15%. You've got a discount there of 54%. That for me is what excited me. I can get better value in America with my South African rands by about 30%, and I get double the income. Just in terms of, I'm not the expert, but in terms of currency, the rand has lost on average between 5 and 6% against the US dollar over the last 20 years. It's currently at 804 is what I heard this morning. The predictions for the future, I don't know where it's going to be tomorrow or next week, but I do believe over the next 5 years we'll all have a good idea where it will be. So not only am I going to benefit from my yield, the potential capital growth one day when it comes, but also the devaluation of the rand, which will be a nice factor to take into account. The second thing for me that's so important is the timing. Most people focus on this part of the curve always. You need to focus on the full curve. And interestingly enough, we're sitting in American property somewhere down here. Some people say we're there, some people say we're there. It doesn't matter. The only time you can ever call the bottom of the market is when you look back in hindsight. So, some of the articles that I just took out of the press, property, tough year 2011 coming off the bottom. Valley home prices, this is in Phoenix, are on the upswing. Stunned home buyers find the bidding wars are back. Wall Street Journal. Interestingly enough, this is a graph, and I know it's not great quality, but it's out of the newspaper, with volume. So in 2000, there were 2 million homes on the market to sell. In the peak, there were over 4 million. We're back to about 2.2, 2.3. Interesting enough in terms of supply and demand. And then lastly, prices in Phoenix are up 20%. Dolf de Roos, anyone here heard of Dolf de Roos? Dr. Dolf de Roos. We met with Dolf, we spent a day with him. He reckons in some places prices up 10% per month in Phoenix. And then lastly, it doesn't matter where you go, and we've heard from a lot of great partners today, but there's opportunities in markets, but if you're not dealing with the right partners, you're going to get burnt, I guarantee it. And the thing that fascinated me was the partners. This guy was a guy by the name of RJ. He gets about 300 properties through every month. Him and 6 people vet through all the properties, they drive around, they go inside every single property, they then go to the auction on the Tuesday. And this was him, we were literally sitting next to him driving around. We had the privilege of looking in about 25 repossessed homes before you buy them. This guy here is Jim. He manages over 1,100 properties. He's one of our management agent partners. Fascinating business, but got over 30 years experience in the rental game. And then some of you are going to say to me, well, this picture here is, but I don't need to get inside. I can buy great deals on the internet. I want to show you a quick video. So this is RJ. You're not going to believe what you're about to see because I couldn't believe it. This is RJ getting in the house. Now his logic is, it's a bank repossessed house. He's going to the auction on Tuesday. And like in South Africa, it's foots to it. You buy it, no questions asked. His logic is, if I'm spending money, I'm getting in that house, no questions asked. So this is him trying to get in. He's trying to use a few keys. He's now trying his card and can't get in. I mean, it's literally could be part of a movie, basically. This is me taking it with my little iPhone. We go around the back, he tries the garage, we're now at the back door. He's not having much luck. Now just in my interest, some of you think that's incredibly dodgy. Would you like to buy that house if you saw it on the internet, going for about $60,000? Anyone? Let's see a show of hands. $60,000. RJ made sure he got inside. This is what we found. These owners are severely pissed off with the bank when they get kicked out of their house. Now, I don't understand why they leave their clothes, because that does, I don't understand. But they leave their clothes, their furniture. We're walking around here, their furniture, they put nice big holes in the wall. Now, just to put a skip in here alone would cost about $10,000. So if you hadn't done your maths, there'd be $10,000 straight gone out of your budget. I don't know what the hell that is. We're now looking, there's food on the floor, we're looking under the sink, it's absolutely stuffed. The point of the matter is, love or hate RJ, you need RJ on the ground to be looking into properties before you're buying them, basically. Lastly, we've spoken quite a lot today. A lot of people have spoken about residency and passports and what you should get. I personally believe, I've got a document outside, I personally believe that in my experience, have never found a good investment as well as a passport. And I've got a document outside if you want to read. It's a research document that I've done. However, there is a gentleman by the name of Dr. Dolf de Roos. He wrote the book Real Estate Riches. Very well known. Neil brought him out here in 2008. Make sure your volume's working. I asked Dr. Dolf de Roos because he actually immigrated to America. He's a property professional. He immigrated based on his property investments. And so I asked him, I said, how did you invest?
one's building at the moment, because right now you can buy stock, you can buy housing and commercial buildings for less than the combined cost of the land and the building materials and the labor to put it all together. So that means that if you build in permits issue, nothing's being built. The population's still been going up. How's that possible? How can the population increase with no new houses being built? Well, people are living with their in-laws and probably their outlaws and all that. They've got more people per home and all that. And they're getting married, but they're still staying at home before they venture out on their own. So there's pent-up demand, or latent demand. The bubble's going to burst at some stage, and there's going to be a big, huge increase in building permits issued and houses being built. But in the meantime, it is cheaper to buy existing stock than to build something new. So I wouldn't venture there. I don't know why anyone would consider building right now when existing stock is so cheap, but it's all going to turn around.
But on that note, I mean, the schemes out there where you can get an EB5, which is effectively a green card, right? Because you're helping a developer build a development in an area that has no growth and they're trying to provide jobs.
That's true. You can get an EB5 that way, but you can get an EB5 visa also by investing in a business or just by investing in existing real estate. So you don't have to buy into a development to get the visa. You can buy existing stock, but that is
we're exploring that a lot further. Obviously, Dolph moved to America based on his property investments. The last thing before I finish, I've had it, the very first person I spoke to when I got back was I told my mother, and my mother said, Scott, it sounds too good to be true. I'm sure it's going through quite a few of your heads. So, being in the game a long time, for me, you've got to know what the worst case scenario is. My uncle was a stockbroker, very wealthy, very successful man, and he always taught me, what is the worst case scenario? And if you can manage the worst case scenario, then everything else is upside. For me, there's three worst case scenarios. One is that the American dollar loses the world parity, like it doesn't become the world currency, and the Chinese yuan takes over. We met with a Wall Street banker, a good friend of mine that I studied at UCT with. He said, Scott, that will never happen for two reasons. One is because China is a regulated economy, and the world will not put their money into a regulated economy. And secondly, the Chinese don't want it, because if it happened, their currency would increase in value 30%, and their whole economy would fall over. So my first worry was taken out. The second worry, what happens if I don't have a tenant? From my research, unless there's an atom bomb in America, the tenants are not going to disappear. The second thing that will cause tenants to disappear is that the banks immediately drop interest rates dramatically so that people can go out, get mortgages, and suddenly buy homes. Now remember, I've already spoken about the psychology of whether they want to buy homes, but it's going to be quite difficult for the banks to drop interest rates when they're currently at 0.25%. And lastly, as an investor, if I bought a deal at a great investment because all around the world interest rates are at 30-year lows and the numbers work today, but they're not going to work when we get back to normality, when interest rates go up, well, you're buying it for cash. So effectively, you're covered. We do investments and have done investments for a long time in the UK and have been very strong in Australia, but Neil has not allowed me enough time. I've explained to you already, we've done 1.6 billion, over 2,000 clients. We pride ourselves on our best-of-breed partners around the world. And what I think is very, very important, there's an organization that governs international property transfers, like the Estate Agents Affairs Board, called the AIPP, Association of International Property Professionals. We were the first company in South Africa to be invited onto that board in 2007. So, what are the next steps? If you're interested in getting a direct property, you need to meet with us, actually set up an appointment. Toreg is actually outside at our table there. I'm going to be around in Joburg up until Wednesday. I personally live in Cape Town. One of my strategic partners, Brendan, is actually here, lives in Johannesburg. But what you need to do is you need to set up an appointment. We'll help you set up an LLC, which is the way to own the company. We'll help you set up a bank account. We'll also help you get a tax number. If you never buy a property, so what? You still own an offshore bank account and you can buy shit on iTunes. We'll then help you find a property, but most importantly, we provide you with an end-to-end solution. We'll help you renovate it, we'll help you manage it, we'll make sure that everything takes place. Secondly, if you'd like to do a property tour, Dolph de Roos, one of the best-known international investors worldwide, has offered to help people come to America, come on a tour with Dolph for 5 days, New York, Las Vegas, Grand Canyon, property, and Dolph de Roos. We're calling it the Big Five. Neil will be there, I will be there, Brendan will be there, and trust me, we like to make money, but we like to have fun even more. So if you're interested in that, let us know. We can give you the details. And then lastly, Wealth Migrate. Wealth Migrate is something we're putting together. It's effectively the collective buying power. A lot of these opportunities need cash, they need cash quickly. We'll be closing it at the end of June. We'll effectively setting up a company. You'll be able to buy shares in the company. One share will be $15,000, and effectively there will be two plans. One will be an income plan, so that's people that want to buy in, get a good yield and hold for 5 years. The second one will be a growth plan, where we'll be putting money behind guys like RJ to go and find great deals, renovate and sell. So if you're interested in that, let us know. It will be by invite only, and I personally will be putting my own money into that because I think there's such amazing opportunity. But the problem we've got in America, 2 years is the best case scenario. It could be less. The opportunity is ended. So, all I can say, and Neil actually said this on the webinar 2 nights ago, the biggest risk you can take is actually not taking any action at all. Those are all my contact details. Thank you very much. I do appreciate it. We do have just 2 things. We've got a feedback form. If you could please fill it in and give it to Torag. We can set up meetings. You can give us your information. I can tell you about the webinars. We're also quite advanced, thanks to Brendan. If you want an app, it's on all your tables. If you've got an iPad or an iPhone, you just download it. You've got all the information available to you. But for those of you who aren't technologically advanced, we've got blog, Twitter, YouTube, and Facebook. Neil and I and Brendan must have made, I don't know, 40 videos. They're all up on the YouTube there. Thank you very much.
Great. Thank you.